Welcome traders, and in this video we're going to be looking at the engulfing candlesticks. Okay, so here I've opened up Euro USD on the daily. We're going to have a look at the characteristics of a engulfing candlestick then. So an engulfing candlestick is essentially a large candlestick that will engulf many prior candlesticks, and that can be on many different time frames. It can be on the monthly, the weekly, the daily, and even on the lower time frames. The most common time frame that we can actually use in order to identify these candlestick patterns is on the daily. Now we're here on the daily on the Euro USD. So if we have a look at what an engulfing actually is, now an engulfing tends to be a large candlestick that operates and engulfs many of the volume, much of the volume of the many candlesticks. So if we look here, if we look at this red declining bearish candlestick here on the 26th of Feb 2021, if we look at the body and the size of the candlestick, if I actually draw a rectangle tool, if you actually look at what we've engulfed, if we look left, we can see here, we can see 1, 2, 3, 4, 5 of the candlestick bodies we've actually engulfed in one day. So all of this volume that we've pulled all the way up here, not taking into account the wicks, just the bodies, we can actually see the body of this candlestick has pulled all the way down and engulfed all of these prior candlesticks. And these engulfing candlesticks usually suggest a shift in momentum, as we can see here. We had a small pull down, a pull back, and then a rally and much further down. So that tends to be the main characteristic of the candlestick. We can see here, we can see this is technically an engulfing because it engulfed the prior candlestick, but we've only engulfed just two candlesticks of the bodies here. So obviously the more candlesticks that the candlestick will engulf to the prior candlesticks, the more strength that engulfing candle will actually obtain moving forward. Now engulfing candlesticks it does tend to be one of the more easier candlesticks to actually identify and recognize on the chart, but it can be a little bit more difficult to actually trade around. Whether you're already in a trade or you're looking for a trade, the engulfing candlesticks can only work if you understand the basics and some of the more key levels that are involved in the market at a given time. So if I scale back and look for another engulfing, because we need to operate with all of the tools and utilize all of the information that we have in order to identify actual trading setups. So if I look at the certain trends that are happening, and then we can then identify exactly how we can use the engulfing candlesticks in order to build upon a setup. Now if I have a look at this movement here then, so we'll have a look from around late May 2019 all the way into June 2019. So we can see here we've had a low, a high, a higher low, a higher high, and then we did in fact come into a downtrend. Here, if I just plot on, let's say, a Fibonacci tool, again, this is just me being very I'm just sort of exploring with the chart at the moment. So here we can see A, B, C at the 61.8, and the D extension was achieved here. So if we know that this up here, that the D extension was in fact achieved on this chart, then we can look for other clues as to where perhaps this chart can go. So if we were looking for bearish momentum to follow after we've come up into this moving average and we've achieved that D extension, we can then see a bearish engulfing here. So this candlestick probably engulfed 1, 2, 3, 4, 5, 6 to 7 of the prior daily candlesticks that we've engulfed in one single day. We've pulled back below the moving averages, and we can use it in combination with all of this basic tools, this basic knowledge, in order to identify a short setup from here. We can then see a bit of momentum sideways on the moving averages, and then we did in fact break further to the downside. So this would have been a pretty clear indication of what was about to occur in the market at this given time, using a combination of many tools as well as the bearish engulfing candlestick that we formed here. So as well as establishing these movements and these engulfing candlestick patterns, it's quite difficult to actually recognize how we can use them to make certain trading decisions and ultimately make a profit from these candlesticks, because there are certain limitations to using candlesticks purely on a technical format. When it comes to only looking at the candlesticks, we do need to use other ways of actually identifying how we can trade around these. Now if we look here, we can see this bearish engulfing once again, engulfing 1, 2, 3, 4, 5 of the prior day candlesticks, and then we did in fact make a small rally to the downside. But we always have to use it in combination with other tools, and also it doesn't give you certain trading outcomes or certain trading movements, because we also need to use other tools in order, for example, stop losses. It obviously doesn't give us stop loss placements, but obviously if we do trade off the back of engulfing candles and we know that certain markets or certain currency pairs will be heading in that momentum and will build momentum for those different directions. And here we can see that it does in fact work as an uptrend. So we can see this bullish engulfing here, engulfing probably 1, 2, 3, 4, 5, 6, 7, 8, 9, perhaps 10, 11-ish days worth of price action being pushed up in one day, up off the bullish moving averages, and we can see that price did in fact continue with that momentum to the upside. So we can see here again, using the bullish engulfings and bearish engulfings in alignment with the momentum, in alignment with all the other tools that you're using, is going to create the different trading setups that we need, and we can build upon and work upon. But it is important to know that these candlesticks aren't bulletproof, and we can't just trade based purely off those movements. We do need to combine it with other tools as mentioned before. But using them in alignment with your bias and direction that you think a certain currency is going to be heading long term is a good indication of when you should be getting into the market, because we want to be looking to make money off the momentum shifts, and long-term trends is where we're going to be making the most amount of profit from. And the final point really is, I tend to usually look at the bodies. I tend to disregard the wicks. The wicks can have some effect if potentially a wick is going to be looked to be potentially filled during news hours or over weekends. I do tend to look at wicks on perhaps the weekly and the monthly in order to identify certain trading setups in my trading plan. But I tend to, on the daily and lower, tend to disregard them, usually look for the bodies, and that indicates where the engulfing patterns are going to occur for me in my trading plan and the way I look at the markets. But that's all for this video. Be sure to stay tuned for more blogs to come, and trade safe.